With me today is Prashant V Wagh, founder and managing director, Golden Bulls Financial Services. Prashant, welcome to Candid with Karl.
Thank you for calling me here.
Yes, and let's get bullish about how you started your career way back. I think it was the city of wine, right?
Yeah, so I am born and brought up in Nashik,
Right,
and I did my MBA Finance 2005.
right.
After that, I worked with couple of organizations. So till 2008, I was in Nashik, got promoted.
So your entire schooling and college and everything happened.
Yes, everything in Nashik only, and then 2008, I got promoted and moved to Pune.
Oh, I see.
So since
Okay.
then, I am in Pune.
Then in Pune.
But
So then curious, Prashant. So this your marriage. I know you're married to this lovely lady Minal. So did this happen in Nashik or in Pune?
I saw her in Pune
Right.
in one of the photograph,
Uh-huh.
but it happened in Nashik.
Oh, I see. Oh. So tell us briefly how it happened.
So it's a very different kind of story that because I never expected such kind of thing is going to happen in my life.
Right.
Because Meenal joined Nashik office.
Your own Nashik office. You working.
Yeah,
Right.
I used to work, and I was heading one department, and I was sitting in Pune office.
Right.
And that time we used to do so many educational program for investors. So
Correct.
that is called investor awareness program.
Right.
And then I frequently used to visit Nashik for those programs. And when I came back from one of my event, and then the branch manager shared me the photographs. I was just looking at the photograph, and then I actually
Oh, you spotted at a photograph? Oh, I see.
I just happened to see her in the photograph, and from there it started actually. And then eventually I came to know, yes, she's not the investor, but
Ah.
she's the employee of our company.
Yes. So it pays to invest not just funds or money, but even in a wife.
Yes.
And
yes.
especially when they talk of love is blind or love, this time it is love is through a photograph. So that's fantastic. But Prashant, if I can even take you earlier, why did you finally narrow down on wealth as your career, on management of wealth as your career?
Look, mostly it happens you used to work thing, or you used to do things which you love to do.
Correct.
Like, so
Your love should become your profession. now.
yeah, so I'm always passionate about reading, traveling. I read so many books. It's not about only financial market,
Right.
but of late I read so many Marathi novels also.
I see. Right.
So it's not
So
it's
fiction, non-fiction.
fiction, non-fiction. So my passion is to read.
Right.
My passion is to travel.
Right.
I travel a lot. I did my MBA Finance. So I started my career with the equity firm.
Right.
And eventually, obviously, I get into the wealth management.
Fantastic.
Because I'm in wealth management because it's my passion to meet the people and
Right.
help them out with their investment.
And you have a lovely daughter. You want to tell us a little bit about her?
Yeah, Anshika. Yes, Anshika is
How old is she now?
she's 13 years old.
Wow.
And she's in 8th standard.
Uh-huh. And is she also going to follow her father and get into the wealth business?
I would like to share one small thing.
Please.
So whenever she gets money, normally we invest. Right. So we got a separate folio for her, and then we normally build her portfolio. We invest that whatever money she is getting from grandparents or the relatives or on her birthdays, right? And recently, like last year, she asked me, Papa, what you're going to do about this money now? I'll invest into mutual fund. But every time, why mutual fund? Don't you have any other product? So I got surprised. कि लड़की बड़ी हो गई है.
Right. Why the name Golden Bulls?
Look, we all are always bullish in our life.
Yes.
If you relate that to the equity market, there is a bull phase, there is a bear phase.
Bear phase, yes.
Right. And everybody would like to see their portfolios in green.
Right.
That is called bullish.
Right.
I am always bullish in my life. I am always bullish on market.
Right.
I am always positive on market. Right. So from there, that bull name came. And as we all know, precious metal, gold,
Yes. Yes.
Nowadays, though, it's like
Oh yeah. Now it's gone into the stratosphere.
yeah. So since last 2025 calendar year, almost 60-70% return. So that gold, so something which touched to any investor's heart, close to
And
investor's
growth.
heart.
And gold always signifies, other than the purity of the metal, it signifies growth and tremendous growth.
So that's why golden bulls. So from there it comes. And one more thing about the name, I decided this name, I think 14 or 15 years back.
Okay.
And I started my business 7 years back. So
So
it was there in
your
my mind.
Wow. Now, if you were to talk about your business, how are you different from other people that manage wealth?
So first of all, you need to understand the psyche of an advisor or
Right.
a distributor.
Right.
Because this is all happens when so every day there are so many wealth management firms are coming, and they are the sales. For them, the sales means every time it's a transaction.
Correct.
Right. But my thought process is the sales starts post transaction.
Mhm.
Right. So it's not. This is not the transactional business. It is what value addition you are giving to the client post transaction. Right. So with golden bulls, yeah, it's the process is very simple. In this era of lots of jargons and technical words, actually client get confused.
Yes, they do.
Right. If you stick to the basics, you will be through.
Yes.
If I'm doing the perfect profiling of my investor, I'm onboarding, my half work is done.
Oh, yes.
Means just to give you a couple of examples are like, if I'm meeting someone and if I start with product discussion, then it is not going to take me anywhere. Right. It is going to be a very short-lived relationship with that client.
Right.
But if I sit with the client multiple times and for a couple of hours each time I'm sitting with the client to understand the client's profile, I am through with my business. Because if I give you what you need, then you will achieve your goals faster than what I want to say.
What do you want to force down my throat? Yes.
So that is the basic
So
principle.
your essence is client understanding.
Client profiling.
Right.
Second thing, once we do the client profiling, we normally manage 30 to 50 years ka cash flow. So
so you're in it for the long haul.
Yeah. So 30 to 50 years ka cash flow, if you see, it's not easy, because I need to understand the client thoroughly. First thing. Second, I need to understand what kind of investment currently he's holding.
Yes.
Right. I need to study those investment with the help of people we are associated, like fund houses, asset management companies. We would like to study, review those portfolio with the help of all these advisors, and then attach those investment with the goals. So simply what we do, we divide goals into 3 different categories. Right. First is your standard goal.
Right.
Which is common for all of us. Right. Then your luxury goal may differ from all of us.
Like
and
going
then
abroad or whatever.
Yeah. Right. So, and then third one is your business goals. So all these goals over a period of next 20 years, 30 years, 50 years, we normally divide, we do the bucketing of these goals. Now, as a golden bulls, as a investment advisor, I know from where which money you require. Right. So up to 3 year, 3 to 7 year, 7 year plus. Right. So once I know all these things, we attach it to the goals and we work on 30 years to 50 years ka cash flow. And that actually, irrespective of what your market is, like maybe post-COVID market get double since last 1.5 year we are struggling.
Right.
Actually, that doesn't matter because I know when the client needs.
And it averages out in the end.
Yes. So that is how we are different
from other people in the market.
Yes.
Prashant, you were already a successful wealth manager with other firms, obviously. So what drove you to start Golden Bulls?
So I would like to thanks all the all the association with all these companies and all the seniors and CEOs. They taught me a lot, right? But every company got their own philosophy.
Correct.
And then they get drive through those philosophy. If I want to do something different, it is not possible to continue with such organization and do what you want to do, what you like to do with the client, right? So that is the first thing click in my mind to start my own business.
Right.
And when it comes to a service sector, and that too when it comes to the link to money, right, it's more sensitive, right? So client centric approach is the thing what I started, and that is why I started my own business.
Prashant, your philosophy is client first. Can you please elaborate on this philosophy?
As we discussed, there are so many wealth management firms are coming in the market, right? Client first philosophy and client centric approach is totally different than what the product centric approach is. Both things are different.
Please, tell us about each.
Yeah. So product centric approach is like, I want to drive something, some
Right.
products, and I'm coming and approaching you, and I'm jumping on that product.
Correct.
Right, because
I
want
the
to
push
sell.
strategy.
Yeah, so I want to sell that product. So that is what the product centric approach is. Client centric approach is without understanding the client need, without understanding the client profile, how I'm going to decide on the product. That is not possible. So that's why the client centric approach to start with relationship, it's very much important, and that actually takes care of your 50% of the.
So you're talking about understanding the client first,
Understanding
right?
the client,
Which is a similar thing like when you have a sales and marketing strategy. In sales, you push. In marketing, you understand what the market exactly needs, and then devise a product or a service to cater to that need. While the name Golden Bulls is very fancy, do you have a clearly defined USP?
Yes. So serving every investor to the extent of zero query.
Zero query.
Yeah. So if you want to work on this line,
right,
then you have to work very closely with the client.
Yes.
Right.
Yes.
So my USP or Golden Bulls USP is work with closely with the client and work on their cash flows for next 30 to 50 years.
So long term. Yeah.
Long term. And how it is going to happen. So we normally profile client, we plan their goals.
Right.
We divide their goals into standard goals, luxury goals, and business goals. Then we come to know, then we prioritize the goals, because if we see all these three kind of goals, you come up with 12, 14 kind of number of goals.
Right.
Then we have to prioritize.
Right.
When you are closely associated working with the client and client's family, one more thing, we actually involve the entire family in this discussion.
Okay.
It's not like if I'm talking to you,
right,
you are coming to my office, or we are discussing.
You get the husband and I mean the wife and the child also, children involved.
If the kids are above 18, we ask them to join also. Right. So
nice.
We came to know, because it might possible your goals are different and your wife's goals are
yes. Oh yes.
Right. So,
and the child's goals may be totally at a tangent. Yeah.
So we prioritize the goal, and when it comes to a third party discussions, because if I am as a third party managing your fund, I am not emotionally attached with your funds. So now try to understand this, right? When I am managing my own funds, somewhere I am emotionally attached. क्या थोड़ा रुकते हैं और ऊपर जाएगा, फिर profit book करते हैं, likewise, right? But when as a third party, we are looking at your portfolio, and in a profile, if you already told me that, Prashant, I'm happy with XYZ percentage, and once we achieve, I normally come and say, sir, we have achieved our target, and let's book the profit.
Right.
So third party approach is always important in this. So 30 to 50 years ka cash flow with the goal planning, with review once in a 3 month, closely monitoring, and then managing it professionally. So that's why we add value to investors' portfolio.
Financial services is a vast term. What is the kind of product bouquet that you offer to your investors?
So wealth management is totally different than relationship management, right? So we are not into a relationship management where if I see money in your account, I approach you and approach you with some product, right? Wealth management is totally different in any person's life. So investment lifespan, if you see, or working lifespan, you need all kind of products,
right?
Right. So we are into equity. So we open a Demat account for our investor. We work on the long-term strategy. We help them to invest into direct stocks. We are into pre-IPO and unlisted space. Then we are into mutual fund. We with the help of our associates, with the help of research team, we review the existing mutual fund portfolio and then we align that to the goals. We are into portfolio management services. PMS is like HNI, Ultra HNI nowadays they are investing into PMS kind of thing. We are into alternate investment fund, that is called AIF. We are into life insurance, we are into general insurance, we are into all kind of debt assets like bonds and all kind of assets, and then we are into real estate, we are into art.
What are pre-IPO unlisted equities?
We can deal into direct equity through our Demat, and that's very big market. But every company got 2 or 3 phases in their life cycle. It's like unlisted shares, then pre-IPO shares, and then listed. Right. So we as an investor got opportunity to get into these 3 kind of equities. So unlisted space is as big as listed space. So we have so many opportunities, good opportunities. So we normally see which are the fundamentally strong companies, but not yet listed.
Right.
They might list maybe in 3 years or 5 years down the line, but today they are unlisted. So that space is very lucrative. If you want to generate alpha in your portfolio, you can definitely think of such kind of investment.
But in case you've misplaced shares, I mean, 3, 4, 5 years, is the possibility of recovery?
Yes, if you got the folio number. If you got hold of the folio number,
right,
then we can actually ask for the certificate. That is very much possible. It takes time, but
you don't lose out.
Yeah, you don't lose out.
What specific strategy do you follow along with cash flow management?
Cash flow management is the basics. It's for all the clients, but we can make it more successful with the help of rebalancing.
Okay.
Right. So I started career in 2005. That time it was like buy and hold. Buy and hold.
Buy and hold, yes.
So you're buying the mutual fund, you're buying the stocks.
You're talking a lifespan of 20 years now.
Yeah. So and then you dekhenge aage.
Correct.
Right. That is how people used to say.
Right.
Because that time the market was very broad-based market was there. Market actually give broad-based rallies.
Right.
Right. The contribution from the people was less. The participation from Indian investors was less. We used to depend on FIIs.
Right.
So that was the major reason people used to buy and hold.
Correct.
Then eventually after 6-7 years, we moved to a sector specific kind of thing. Right. So then you say ki defense looks attractive. Pharma looks attractive. Right. Let's get into banking and finance kind of thing. And then you start picking sectors. Right. Now, when we are talking, it's not a sector specific, it's more over a stock specific thing. Okay. You have to, under one sector, you have to choose the stock which are fundamentally strong and going to give you a good upside in time to come. Right. So if you see all these transmissions of like in last 20 years, today, if you are not rebalancing your portfolio, you are losing out on the profits. Right. So our another USP is like with managing 30 to 50 years of cash flow, we try and rebalance portfolio once in a 3 year.
Prashant, you've been very successful. Have there been any instances where the success did not meet your standards?
Yes, it happens. Because in our business, it's not only what I thought.
Right.
It's about the market.
It's about the market, correct.
Right. So whatever strategies we are forming for the client, at the end of the day, it depends on the market.
Correct. And you adopt them with your limited wisdom.
Yes, right. So when markets are volatile, and if that stage get increased to say 6 months, 1 year, 1.5 years, then obviously clients start asking,
right,
what happened?
Right.
Because our philosophy is to educate client. When we are onboarding client, our onboarding process itself says we sit and ask client, what is your expectation? If client is saying I am happy with 12%, then I should clarify him or her, look, market is sideline, market is not performing. We might not get 12%.
Yes.
We might end up with 6%, 7%. But yes, if you stay put for 3 year, 5 year, then definitely instead of 12%, we might get 15% because that is the historical return.
Correct.
So market is all about accumulation. Try to understand. It's not like you buy today and like fixed deposit you get at the end of year, right? The interest part of it. Because it's cyclical, if you see, say the market is like, it's not always on a linear. Say 2020 and maybe 2035, right? Market went from this to this level, right? It's not like linear. It's like a zigzag mode.
It's zigzag, yes.
So you are into that zigzag mode. You have to be patient, right? So we have to go talk to client, and here, as I told you, we meet once in a 3 month. That actually helps.
And you're probably able to reanalyze goals also, where you're headed and what you're doing, and
it's not about analyzing the goal, but we normally talk to client and see if he got more liquidity.
Right.
If he invested only lump sum, can he start with the SIP? Because SIP is a very powerful tool.
yes.
And in such sideline market or a volatile market, if you are putting SIPs every month, a sizable amount, and even though after 1 year, if you start, you will get the good upside, because it's all about accumulation. Mutual fund as a product, it's a product of accumulation. Look at the mutual fund from the point of view, you are just accumulating funds,
Right.
and then you are getting upside on whatever you are accumulated in 1 year, right? So actually, say to elaborate in a example, say 2011 to 2020, if you are investing, say 10,000 per month, right? So you are investing 1,20,000 per annum. So you invested over a period of 10 years, you invested 12 lakhs rupees,
Right.
right? So, and at the end of 10 years, your 12 lakhs say become 20 lakhs. Over a period of 10 years, market was sideline, not well,
Right.
whatever, going up, coming down. But post COVID, market get double.
Right.
So your 20 lakhs become 40 lakhs. So try to understand, you invested 12 and the value is 40. So now that's why the fun in the game is, if you stay put for longer period, you'll
Yeah.
get that appreciation.
In rebalancing, do you have any recent case where you received tremendous appreciation from a client?
Yeah. So as I told you, we need to decide on the upsides, right? As a third party, I know which sector is giving which how much upside,
Right.
So from November 24 to February 25, we saw a good rally in the market. Before that, we saw a good rally in the market. Just to give you example of, say, small cap funds,
Right.
small cap funds, small cap PMSs, right? They give very good rally. End of 24 and start of 25, we feel we got like more than what we expect from
Anticipated, yes.
Small cap, right? So we call all the clients and say, "Okay, let's book 100% profit into small cap." Right, with the help of whatever inputs we are getting from
Right.
the asset management company, fund house, fund managers, we told client to come out of small cap, right? Because we see some stagnancy in those 3-4 years. So you don't imagine in those period before that, post COVID, the money get doubled in 2 years for the small cap.
Right.
And I never saw such kind of rally, such kind of profits in my career.
Oh.
So something is like out of your expectation.
Correct.
So better to be cautious and book the profit.
Right.
So we booked the profit, and because market was not showing any upside, we normally think let's invest into with some research, with some help from the advisory team and the fund houses, we get into metals. So we get into gold and silver kind of thing. And you see 2025, we got from 60% to 130%, 135% in silver. And actually client called, so many client called and say कि यार ये कैसे होता है, मींस ये आपको कैसे क्या पता चलता है? हमें पता नहीं चलता है, हम स्टडी करते हैं, बात करते हैं, and then we rebalance. So again, if you see why clients are appreciating, because we book profit, we get into another strategy, and now we are sitting on 60% to 135% profit within 1 year. But saying this, is that mean that it is going to be like this? No. Right. So
yeah, you can't forecast the future.
right. So that's why client keep appreciating that, help us to keep us motivated to give a good service to the client.
Prashant, what exactly is a multi-asset approach?
So multi-asset approach. So irrespective of whatever market phase you are into,
Right.
right? If you bet on only one kind of market cap, definitely, or a asset class, definitely you will not get returns every year.
Right.
Right. So multi-asset strategy is very simple. As per your profile, as per client's profile, we normally see how to divide that 100 rupees.
Right.
Right. So we have fixed income, we have equity, we have real estate, we have commodity. Right. So and then we have cash and cash equivalents.
Great.
Right, for the emergency. So normally these are the five things one should look at when you are doing multi-asset kind of strategy. Is there any specific time one should have a multi-asset? No. Okay. Every time, irrespective of
always.
Whatever, always.
Right,
you must have a multi-asset kind of portfolio. Yes, the contribution may change. Right. So if you are 20% in metals, that become 40 now. 40%. So you have to trim down also.
Yeah.
So it's not like I bought these five things into like 2020.
Right.
It depends on the client's profile. But at the end of year, we have to look at the contribution again, because 20 become 40, another 20 become 15. So we have to realign.
Right.
So every year or once in a 3 year, you need to rebalance your multi-asset approach, because you are getting older.
Yes.
By year, every year, right? So you have to. So that's why multi-asset approach every time. So it's not like
you advocate is the best approach.
Yeah.
Markets being consistently volatile, what is your future course of action for clients?
First of all, I would like to clarify here. We got distribution licenses.
Right.
We are not into advisory.
Okay.
Whatever we not talk to client, or whatever discussions happening between us, is on the basis of the advisory, the reading, the, whatever discussions we do with the fund houses, asset management companies. Right. About your question, which is very legitimate at this time, type of market, what one should do, looking at the current market scenario,
the volatility,
volatility in the market. So with the help of my reading, my understanding, on the basis of those, I can see if you have any goals line up till December 2027.
Okay, end of next year.
Yes, we are in Jan
2006.
26. So another 2 year. Whatever major goals are lined up, better one should actually move that from equity. If your 100% money is parked into equity, move from equity to debt. Right. So your capital is safe. Say, to give you example, like if I'm sitting on, say, my portfolio is of 10 crore, and I need another, say, 75 lakhs over a period of next 2 years for my daughter's education.
Right.
So I know I need that money. My goal is less than 3 years. I need that money.
Right.
So irrespective of whatever market is, first one should book that much profit, whatever the requirement for next 2 years, book that profit and move that to debt. First thing. Over and above that, if your portfolio is over aggressive, if the allocation to equity is on a higher side, under equity also you have to look at the large cap, mid cap, small cap. If it's at a higher side, reduce it, go into multi-asset allocation kind of thing. And third and most important, keep 20 to 25% money into debt, because
20 to 30%.
20 to 25% of your overall asset, you keep into debt, park into debt, because if you get opportunity in maybe a 6 month, 1 year, I don't know with what news we will get the opportunity. If we get the opportunity, you should have that money to park at a lower level. So that is most important.
Right.
So one is the funds you required for till December 27, park it aside. Second, align your portfolio in a multi-asset allocation kind of thing. And third and most important, if you want to buy at a lower level, you don't have any fresh money to fund, you actually keep aside 20 to 25% from your portfolio.
So the immediacy of your fund requirement dictates the apportionment of your portfolio.
Yes. So that is what we are actually talking to all the families we are managing, and I think that will help us to actually sail through this volatile market.
Prashant, as we come to the end of what is an absolutely fascinating discussion with you, what drives Golden Bulls and Prashant V Wagh?
Serving every investor to the extent of zero query.
Zero query?
Yeah, right. So I want all my investors to come and ask me so many questions.
Right.
You
welcome questions.
Yeah, I welcome questions, because my thought process is like, if I educate my client, I am reducing my own burden, right?
Right.
Because when a client saying ki you take XYZ money and then you manage, that's the biggest responsibility I have. When client is uneducated, but if I educate the client and the client is saying ki, now I think I know everything,
right,
that time I actually reduce my stress, I reduce my responsibilities, and then we both, investor and the advisor, we both are working on the money. It is impossible to have a zero query, right? But yes, my thought process is to keep educating client every day whenever we meet, and that actually take portfolio to a higher level.
So in the famous line of Jerry Maguire, he says, "Show me the money." And I'm sure, Prashant, you've been showing people the money and where to invest and where to multiply that money. Long may this continue. My very, very, very best both to you and to Golden Bulls.